on the show.
On the, just remember to share once the video comes up.
Let's see.
All right. Well, we are live on Facebook, folks. I just want to say good morning to you. It's Thursdays. Here in a couple minutes, actually less than a couple minutes, we'll be starting the show live. So thanks so much for joining us.
Where's the link?
Vinyl Draft Radio. You go to the page, you should see it. We should be at the top. And then I'm going to put everything on silent because I know what happens there. I will remember this time. Oh, there's that view.
There we go. Sure.
Little Bruce Springsteen in the morning.
Yeah. Share to a page.
Copy 1 minute. All right. So how'd you enjoy Thanksgiving?
Very well.
All right,
Thank
we're
you
gonna-
very much.
I want to dive in a little bit more because I know you just moved back into the house.
Yes.
All right, 30 seconds. Good morning, Cheryl Howard.
Du, 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 du. The boss.
Good morning, Clear Lake and beyond. It is another Thursday, which means it's another show. It's another week of talking with some great professionals. And this week, I have Jason Means with Perfect Policy Insurance. Welcome back, Mr. Jason.
Good morning.
And happy post-Thanksgiving, pre-holiday, mega, events going on for the whole month. It seems like something's going on, especially for the kids. They've got a lot going on.
Oh, yeah. I think we're planning to go to Santa's Wonderland this year over in College Station. We've not done that before.
You know what? My kids are gone, and we had never done it either. And I think this is the first year I went, maybe my wife would probably enjoy that more than
Right.
the kids would have. And so I'm thinking maybe take that, an hour and a half, 2 hour drive from at least this
Right.
point.
Right,
It's,
sure.
How far is it from Katy, right?
Yeah, from about
About an hour.
30 minutes less.
Oh,
Yeah.
30 minutes. Okay, so about an hour and a half.
Yeah.
All right. Well, I definitely want to get up there, but let's talk about, I know you had just moved back into your house, recovering from
did.
the storm. How was Thanksgiving there? Did we have a big family or just keep it?
Just really, most of our family lives out of state, and we weren't sure what was going to happen.
Right.
So really, we just had my father-in-law came over, and we did have it in our house after we moved back in. So we were lucky. We were one of the very few people, families in our neighborhood at the house. So it was quiet in the neighborhood. But
Yeah,
we
you
were
had
there.
said that you were the first ones to move back and get everything going. What's the status now?
Well, my two neighbors are within about a week now of getting back in, and
Okay.
across the street they're within a week or so as well. So it's by Christmas I think we're going to be getting much closer to back to normal, which will be great to have people in the neighborhood.
Yeah, for the holidays, and I know you probably have. It's nice to have kids running around during this time of year and stuff.
Exactly.
And now I read something. Just to throw it out there, weather-wise, they said we might even get a little bit of snow tonight, but I think anything south of Houston, probably not. But maybe over in Katy, you might get
never
some.
know. Yeah, actually, the last time it snowed in Houston, I actually know the date. 12/4 of 09, because it's the day my son was born.
Oh, wow.
It's the last time it snowed in Houston.
That's a good mark. Normally it's done the other way. When it snows, you stay in and
Right.
Okay, I'm just saying you did that backwards. But no. Well, that's awesome. For some reason I was thinking it was 2008, but I guess you're right. It is 2009.
Yep, I know it well.
Because it snowed in 2008 and you were able to make snowman. In 2009 it snowed again. It wasn't as much.
It wasn't as much,
right.
but it was the last time that it actually did snow.
Yeah, but I'm not counting on that happening again this time. I think we're going to probably down this way probably get more sleet and rain than anything.
Probably won't stick, hopefully, because the ground's not quite
right.
cold
We're
yet,
still warm.
Right.
We're still going into that. But for those listening outside of Houston, Texas, this is like a big deal to us.
Yes.
We just last night everybody was like bundled up, and we hit the 40s. That was pretty. I think 30s are supposed to be tonight. So, for us, this is our winter. It may only last a couple of weeks and then be fall the rest of the
Well, last year
season.
our winter lasted 48 hours, and that was pretty much it.
I remember. I was just like, wow, really? Did that happen? And what's funny here is you always know when the weather's going to change because it's preceded by rain right now.
Right, exactly.
So you get rain, cold, rain, hot. And it's great. So when the weather's going to change. So, all right. Now that does point out there are some things probably insurance wise. I mean, that's why you're here to kind of talk about insurance. Some things to kind of look at. We have rain going on right now. So now would be a good time to maybe crawl up in those attics if you haven't already, because a lot of us have been through stuff already, but look for little leaks in places. Now's the perfect time to do that. Also though, from utility standpoint, good time to,
get your heating and AC systems checked out so you don't have a fire, obviously.
Yeah, I didn't want to call. I didn't want to be the pot calling the kettle black. I turned on my furnace yesterday for the first time. I could live without it, but my wife gets home, puts on a sweatshirt and a blanket, and sits at the computer, and she makes it like it's Arctic. And I get it. It is cold. I'd rather be cold than hot. But I thought I'd be nice, and I clicked on the heater yesterday before she got home, and I put it on 70 because I figured that was warm enough. And then I came back in at some point during the night. She's like, I have the heater all the way up to 80 and it's not getting hot. And our furnace was not working. So I had to call our home warranty company today.
There you go.
So we'll see how that goes. So yes, check those things now and check them during the day. It's probably a better time than at night when you turn it on and want it. But me, that was okay. I was okay with the blankets. And then I thought of my wife and I threw another blanket on her side of the bed and I put a little heating pad under there.
Guy.
I know I was being, but of course I fell asleep before I could see if she appreciated it, but I'm sure she did. So,
right.
All right. So let's kind of recap your last visit with us. Last time you visited us, we did a shopping. Mm-hmm. And I told you I do this every year, and I recommend insurance shopping every year, not out of disloyalty, not out of just looking for a better price. It's looking at, when it's time to buy something, you should always shop around for it. You shouldn't take for granted certain things. Insurance in particular, price can be a big factor. There are some, and not so much home insurance as much as, say, auto insurance. Companies tend to increase you regularly on car insurance. So maybe that's something you can look at for price-wise and then coverage. But when it comes to home insurance, we really discussed the importance of shopping and some of the things you want to shop for insurance. So I wanted to kind of rehash that just a little bit before we talk about the results of the shopping that we did together and, for my new policy. So what are some of the things people should be looking at from a home insurance policy kind of shopping standpoint?
Well, the things that will make a difference come claim time is probably one of the biggest things. Obviously, price is always the big factor, and it's almost always the number one factor for most people, unless it's really, really close.
Right.
So price, obviously, a big one. Other than that, the things that are going to affect you are going to be what happens during claim time. So deductibles are one of the big things there. A pretty common deductible in the Houston area is 1% deductible for all other perils other than wind, and then 2% for wind. But there are different companies that offer different deductibles. So that's and the lower the deductible, typically the higher the premium. So because you're basically retaining some of your own risk, the higher the deductible that you choose. So that significantly affects the pricing as well, and affects you come claim time. So you might pay a little bit more to get a little bit less retention of your own risk, and vice versa. So those, the big thing. Also, the coverage amount can have a big impact on your coverage come claim time.
And that's the amount, per, like, when you say coverage amount, you're talking about the different
dwelling coverage amount.
Dwelling
basically,
coverage.
it's basically insuring the value. You want to make sure that you insure your home to what it would cost to replace the home.
Okay.
Some people look at their central appraisal district and say, well, my home is only appraised at $140,000. Yeah, but you have a 3,000 square foot house. So you can't rebuild a 3,000 square foot house for $140,000. It might be older, and your land, you might be in a neighborhood that's not the most coveted neighborhood, and maybe that affects, what your tax appraised value is. And by the way, people generally fight their appraised value to keep it as low as possible to pay the fewer taxes.
Exactly.
So, but you want your home to actually be worth more. So anyway, the amount that you actually insure the home for has a big impact, or can have a big impact come claim time. If you underinsure by too much, you can get hit with penalties. So you don't want that to happen.
Yeah, and the big thought with that is just, you've got to think of that amount as just simple. How much does it cost if you had to rebuild it today with today's materials, today labor?
Exactly.
That's what it is. So that $140,000 house isn't going to cost $140,000 to rebuild.
Right. Not if it's 3,000 square feet.
Yeah. I mean, the bottom line is labor costs more today than it did 5 years, 1 year, 2 year, 3 year, 10 years ago.
Yeah. And materials.
Materials cost more too. So you are going to pay more for that house. Plus everything's upgraded.
And the codes are more stringent now too. There's things you have to do now that you didn't have to do before.
Exactly. And yeah, exactly. More permits required than you would need before in a lot of things. So certainly, so those are three big areas. And before we, when we come back from our first break, we're going to kind of go into how I looked at those areas to determine. And I think it's kind of interesting how things turned out. But before we do go to a break, I just want to throw out there real quick, and I forgot to mention at the beginning, happy anniversary to Lori and Jay Kopic. I believe it's 15 years, and throwing it out there. She's one of our show experts, and Jay, is has a big stake in the success of the Associated Credit Union of Texas, our studio sponsor. So I wanted to make sure that we just give them a shout out. Plus, I happen to like those two, so I figured why not give them a little shout out. So one of the things that I found when doing this shopping was that there are a lot of you basically get two documents overall that kind of explain the policies or the deck pages or exactly what they're offering in a nutshell in layman's terms, which I enjoyed getting from that we talked, because it's you think it's easy to go apples to apples on that. But what I found out was that it was the stuff that wasn't really pointed out that could make a difference. And so I went back and forth between, a couple companies, yours being one of them, and then my current one, both which did, great job trying to find me the best policy, by the way. And they pointed out things on their policies or the policies that they found that were beneficial to me. One of the things that struck me, they seem to have some of these insurers, underwriters, and not the agencies that were doing this for me, but the actual insurers. They had little hooks that they like to throw out there. And one of these policies was, we'll cover equipment, your home's equipment. And I'm thinking, so is that like a home warranty?
In a way, there is some companies do offer equipment coverage or equipment breakdown. That's not super common, but it is something that does exist, and it is somewhat like a home warranty.
The biggest difference, why it meant nothing to me, I do carry a home warranty. I believe in them. I know how to use them correctly and properly. But it was funny because when I looked at it, it was like, hey, we'll cover all this, but you still pay the deductible unless your deductible is $2,500. Yeah, you know what I'm saying? So I'm like, okay, wait a second. I can pay a home warranty for $500, $600.
It's a nice bell and whistle that you don't really get to use that much.
Right, and so you have to look at those things when you're shopping. That was just one of the things I noticed when I first going through, a couple of these options that were thrown my way. And I was like, people like to throw hooks. Like the last policy I had offered mold remediation. We had talked about that.
Right.
And you had said, well, what does that mean? Is that... do they actually take care of all the mold, or do they do this part? And those were questions I didn't ask. What hooked me was mold remediation. Nobody else does
line
that.
item, right.
So, all right, looks like we're coming up on our commercial break here, and we are talking with Jason Means, owner of Perfect Policy. We'll be back shortly and talk about our shopping results.
Right.
All right, so
There are, I could have expanded a little bit more, of course, on other things, like water damage coverage is another factor that can be,
yes,
that you should consider. That's one of the things that isn't always automatically included.
right. Now, water damage isn't the same as flood, so
Right, exactly. That's like a pipe breaks, but there's even varying degrees of that. I mean, there's accidental discharge only, which is if a pipe breaks and suddenly there's water everywhere. And there's also if you just discover a leak that has been there for some period of time, that's not covered under sudden and accidental. That's if you have all water damage, full water damage, which is often covered in an HOB policy, then they'll cover those scenarios too. But it's not always covered that way. So there's
Do
lots
I
of
have
little
that?
factors.
I don't
Let's
even
see.
know.
Well, you have this is an HO3 through, so I'm not sure. Usually the HO3 does not cover that. Our policy was an HO3 as well, though. An HO,
thank you.
yeah, an HOB is an older policy form that was a little bit more comprehensive. But let's see. I'd have to. You have water backup.
Well, you know what? We'll go through that. Yeah.
I'd have to read the whole thing to verify
What do you mean the whole thing? Like the
the whole policy to see what the water damage
Oh,
coverage
gotcha.
specifically is.
Gotcha.
I see that you have limited mold.
You know, we'll
Yeah, they
talk
don't.
about it on
It
there.
doesn't usually say on the deck page specifically the water damage. You have to kind of know what's in the policy, so it's a little bit more complicated.
Yeah, and I didn't get like the whole policy yet. I'm sure.
Yeah. It's these two policies are HO3s, so they're going to be very similar in that regard.
Is that your phone dinging or was it mine?
I don't know.
Do you have it
Let's
off?
see. Yeah, there we go.
Welcome back. I am your host, John Wilkinson, real estate agent and also host of the Bringing It Home radio show. And I am talking today with Mr. Jason Means, the owner and the lean, mean purple machine of perfectpolicy.com. And again, I try to coincide the shirt with your
Yes,
visit.
you do, and you
I try.
usually do,
I
yes.
try. Do what I can. And I think I even got this got a little bit of purple in it too.
Ah, a little
I
purple
don't-
tint.
Yeah, I can't do that. All right. So before we went into the last break, we kind of were talking about certain things on insurance to kind of look for when you're shopping around. One of the things I want to cover some terminology real quick, because the first thing that's always thrown out there is deck page.
Right, sure.
So tell us what a deck page is.
The deck page is just short for declarations page, which is the part of the policy that lists all your coverages, your dwelling coverage amount, how much
Right.
personal
And it doesn't
property you
explain
have.
everything. It just gives their terms
It just
with
gives you
amounts.
it's like a table of contents, basically, of your coverage. In
That's a good way to
it's
put
a
that.
summary. It's a quick summary. It's generally one page. Sometimes it's a couple pages, but they try to get it all on one page so you can see real quickly how much coverage do I have for each of the things that's covered, what's my deductible, what's my premium. All those things are all listed typically on one page.
Okay. And what I noticed is that depending on who, doing my shopping, I've noticed a couple different things. There's, some that just put it on one page and list it out. And then there's others who list out and kind of explain what that coverage is, not, exactly, what that topic is. Like, let's just say
like
yours.
the one that we
Yeah.
did this is a more of a unique. This actually isn't really a deck page. It's more it's more explanatory. It gives you more details. A deck page would actually be issued when the policy gets issued. This document is actual part of your policy because you bought it.
Right.
This this is
This
a quote, and
document
this is
is
just
a
how they
quote.
display the quote that explains each coverage a little bit more in detail.
And that's the difference. Like I said, the deck page actually just had a box with lines, and it was just
Right.
10 things in it, and that was it. And basically, and then it showed your deductibles, and that was it.
Exactly.
But I will say, through the shopping experience, you see different ways, people present different things. Now, the first thing that I noticed, and we'll start out with this, first I asked Jason, if you all remember, I normally do shopping for insurance every year, like I said. And this year will be the first year that I've asked Jason and his team at Perfect Policy to help me with that search. And that's really what you do. You help find perfect policies as much as you can for somebody.
You bet.
And it's not just about price. And it's funny I say that because one of the biggest number on that, the biggest font is the price.
The price.
And it is a catchy thing. And because price is important. And like I said, I believe it's the first thing you mentioned when I said, what are some of the things people should look for? But it's not everything, which we'll discuss. So what I loved about your format was, like you said, it wasn't a deck page per se because there wasn't a policy, but it was it showed the amounts, but also the descriptor of what it was and a brief summary of what it was, versus where a normal page that I had gotten was just numbers and the name.
Exactly.
And I found myself reading yours and just looking at the numbers on theirs.
Mm-hmm.
And there's a difference. You want to be more educated. So that was a big plus for me when going back and forth between the two policies that were offered, or that the best you could find me.
Sure.
Both these companies could find me. So let's kind of go through some of the decision process, and you can help me kind of explain some of the ways to do this. If we kind of look at them side by side in a way from what you can tell, they're not in the same order, obviously. But I want to start off by saying the price, again, is important, but it's not always the key.
Right. And it depends on, that's individual, obviously. Yeah, that's individual, obviously, depending on what each person wants. In most cases, we find that price is the biggest factor for people that come to us because they just want to save as much money as they can.
And trust me, I am there with those people. I think, and that's part of it, is you want to be able to save that. But I'm also one of those, and maybe I'm optimistically pessimistic, that if I don't really weigh out the factors, the factor I didn't consider is the one that's going to get me. So that's how I view it,
Sure,
and that's how I suggest most people view it. But you're right, price is a big factor. If I didn't care about price, I probably wouldn't even be shopping for insurance.
Right, sure.
Like, hey, I want to get better coverage,
Yeah, but there's a lot of factors that go into the whole process.
Right, and like we said, it's deductibles and it's all that stuff. So the other thing I noticed about the policy you found me, and Danielle, and I'm going to do a shout out to Daniela at the League City Perfect Policy. I just want to make sure it was League City.
Yes, it is.
She was fantastic and helped me in every way and answered questions and was very timely and responsive. And I know she did her job. And I just want to thank her on the air for that. And so the policy you gave me that you guys considered would be my perfect policy that you could offer me, gave me a super low price it over my current policy. Now, what I didn't know going into this was that my current policy was going to increase. So it was even a bigger savings than I thought, at the end of the day. And I want to say that was fantastic. I mean, again, you had the hook. Now I just had to look into the fine details. So this policy that was found was going to save me about $900 a year. That's fantastic. I mean, that's a great job, So looking into some of the details, where do we go from here? The first thing was the home value. Now, my curiosity, I'm not a builder, so we had talked about coverage briefly before. And so you quoted the same thing that the other people did, 370. That was the number you guys are using. That's okay. You can knock it around a little bit now that it's in your face. You went with the 370, but you made a recommendation. You said, if you don't think you could build your house for 370, I recommend that you increase it. It'll increase your price, but at least it'll be more accurate in case something happens. What's the philosophy behind that? Your words of wisdom, should I say, to somebody?
Well, I just would always make sure that you insure to value, because typically the insurance is going to cover replacement. Even if it's replacement costs, it'll be up to the value of what you insure. So if you're, because we come back to the 80% rule. So if your house costs $200,000 to rebuild and you insure it for $180,000, you'll still get replacement cost valuation, but up to $180,000 if you insure it for $180,000. If you go below 80% value, if you insured for $150,000 or $140,000, then you start getting penalized, and you're not going to get as much money because you didn't insure it for as much, and then two, you're actually going to lose money because you're going to get penalized for not insuring the value. So if your home would cost $200,000 to insure, you should insure it for that, because it's only a little bit more than insuring it for $180,000 or a slightly lower number anyway.
And how does that affect the price? The price would go up.
It would, but is it?
It's
not a huge amount though.
Like, would you it wouldn't be like $2,400? I mean, you can't really tell until you put the numbers in
I
there.
can't say, but if we're at $370, if we took that to $400, that might go up, $100 or less, and that's for a lot more coverage.
Yeah, and that definitely works out. Okay.
Yeah.
So, word of advice is don't try to pull the old, hey, my house is worth this, or I'm just going to tell my agent that this is what my house is worth because I want a lower price. Let me ask you, how do you prove?
Well, what happened?
What do you do here?
Well, and this is why there's an 80% rule. I mean, 20% is a pretty significant amount of fluctuation that's kind of built into the calculations, because there's no exact science to what a home's going to cost to build. You could go to 20 builders and they're all going to give you a different price for basically the same house, right? So
right.
There's no exact science, so you know exactly what a home is going to cost. So the 80% rule gives you some freedom within that. So it's just important to get it close to there, because what's going to happen when come claim time, usually a claims person is going to come out, and the first thing they're going to do is do their replacement cost calculation on what the home should be valued at. And from that, they determine, did you insure to value or not? And then they start to figure out, okay, well, what got damaged and how much damage is there? So if you don't insure to value, then you start behind the 8 ball first
right.
thing. And the insurance agent, or you, don't really determine what that valuation is going to be when it comes to claim time. The adjuster is going to do it. So that's why you don't want to play with that number. You want to be.
But there's no like double
honest.
checking. There's no like all of a sudden there's like, no, you know what? When you first get the policy, they're like, you know what? No.
Well, I mean, ultimately it's up to you how much coverage you choose to take. So
gotcha.
And in Texas, the policy reads as the policy reads. Once you get the policy, that's what you have. So you want to talk through with your agent to make sure you're comfortable with the coverage that you have. But all agents should, and we certainly do, have what's called a replacement cost calculator.
All right.
Marshall, Swift, and Beck is the most common one, and that you put in all the values of the house. How big is it? What's the floors? What are the walls? How high are the ceilings? What kind of finishes are there? And all those things you calculate, and you push a button, and at the bottom it says, well, this home should cost around this much money to rebuild in the case that it was fully destroyed. But there are multiple different replacement cost calculators too, and they're all going to come up with a different number, but they're all going to be generally within 20%. So that's why they have that rule.
So you come up with a number, and then some guy goes, hey, my house, I only want to, insure it for $100,000. Are you going to take that policy?
Well, if they insure, if they're clearly underinsuring, one will recommend an actual cash value policy anyway, because you'll save the money rather than doing a replacement cost policy. But we'll have them sign a piece of paper that says, I recognize that my agent has recommended more coverage than what I'm choosing to get.
So it's a little CYA.
Yeah, just to cover, because, ultimately, again, the policy reads as the policy reads. Once you pay for it, buy it, sign the papers, that's what you have.
Right.
But we want to make sure that people understand we're trying to help you.
Right. And There are people, though, that will go out there and try
Oh,
to
yeah.
spend $1,000 a year on full coverage
Absolutely.
insurance, even though it may not cover as much as they need,
Right.
in the hopes that nothing happens.
And who's the first person to start screaming when there's a claim and there's
There's not enough money to cover what they need. I get it. I get it. I get it. Well, I think it's it's an important factor to kind of consider, and it's not. Again, it goes back to the whole price thing. There's got to be a reasonable price,
Sure.
but trying to make it more unreasonable. I will say I felt totally trustworthy of Perfect Policy, providing me what they felt would be the best for me, but also at the best possible price. So I didn't think there was anything. I did not feel like it was a hard sell thing where it was what's in it for Perfect Policy. It was trying to find me the perfect policy. So again, I appreciate Daniela living up to the name of your company on that.
Awesome.
I want to say good morning to a couple people that have joined us. Good morning, B. Flores. Good morning, Lori Kopic. And you probably missed our little congratulations to you, but hey, it is what it is. I only say it once. Just kidding. Congratulations on your anniversary, Lori. And Jason agreed with me on that. We think that even though he doesn't know Jay, it's something to be proud of.
Well, I don't know him, but I know he's lucky. So.
Oh, wow. Look at that. Who knows? Maybe we'll get a greeting read by Leon at some point to you. It's the first time I've thrown Leon in there today, and he's probably, oh, wow, he just wants to be left alone. It's Thursday. I get it. It's been a long week. All right, so we are talking with Jason Means, owner of Perfect Policy. We're kind of hitting some of the areas that I looked at to consider the shopping. And again, I was very fortunate to have enlisted the help of Perfect Policy, as well as my current insurance company, to kind of not compete against each other, to just help find me a policy that they felt would be best for me. And then it was up to me to kind of go through and ask the questions that maybe weren't answered. And that's kind of what we did. So we're kind of walking through that process so we can kind of finalize this and then kind of talk about the results that came of that search. So we are going to take another break. And when we come back, we'll be doing just that. We'll be analyzing the information provided to me by both companies and then coming up with the ultimate conclusion to it. So join us here in a couple minutes and talk to you soon.
Right down to the second.
I'm trying to get the timing down. So I'm working on it. Eventually we'll get it to where it does it automatically.
Automatically?
Go to commercial, from what I understand. Ultimately. Yeah, I'm one of those people that, I think that might, I think there's probably a little play in there, but with you, if I end it right on time, then I know he can go to it. I know if I ended up a couple seconds early, I know we can go to it. With that, we'd have dead air on the thing, so I'm trying to get it to his timer. But how do you sync the timer exactly to the computer so if it did cut off? That's the thing we have to think about. That you could just blow up the time.
Leads up to it. Yeah, I hear that on the radio all
Like
the
the
time.
cutoff at the Emmys.
Yeah, exactly.
Yeah. Right. That's fine. We should actually have we should just isolate your vocals and just play them as a best of clip.
Oh, yeah.
And just play those. Just where you're repeating yourself 5 times in a row. And then you're just like, hey, listen to me. Because not everybody hears exactly what you're saying all the time.
Behind the scenes. Yeah, and even on Facebook right now, they probably can't hear. Right. Gotcha.
Yeah, no, right now we're looking like fools.
Right. We're just Talking to a ghost behind the mirror.
Leon the Ghost. Oh, no. Good morning, Kelly. Good morning, Charlotte. Good morning, Mr. McHenry. Copy 10. And we are back with the head bobbing, moving and grooving, Perfect Policy machine himself, Mr. Jason Means, owner of Perfect Policy Insurance. So if you've just joined us halfway through, we forgive you. But that's okay, because we're getting to the kind of nitty-gritty of things a little bit here. We were kind of recapping the insurance shop that we've been doing basically for a month now. We started last month at the last show, and I had thrown the gauntlet out to Perfect Policy to help me find a perfect policy, and doing my yearly shopping. And we've kind of covered some things, such as there are a few things to look at when shopping. That's price, your deductible, and your coverage amount are just probably three of the most important areas of that. And then there's also little details. So we just talked a little bit about the property coverage of things. But another thing that came up that was a little bit of a factor for me is you have to understand as a consumer some of this terminology on the coverages. You know, little things like, I mean, I understand what a named storm is or unnamed storm, but that played a factor in this time because if you're not reading, I don't think they don't really say unnamed storm. They just call that wind or...
Yeah, just regular wind peril.
Wind, right. So those can be different deductibles.
They can.
And or they can be the same. And those are things you have to kind of look at because sometimes it's the things not directly pointed out to you that you don't know you should consider. And that's why shopping is important because other companies will point out those things. I know Daniela was saying, hey, look at, this is coverage and this is why it's better. Now, I did notice on a lot of the coverages that Perfect Policy found me on different areas, perils and stuff like that, were slightly better in coverage by $1,000, $2,000 on the coverage. And I thought that was fantastic. And it was lower price. So already I'm like, yeah.
Sure.
And like I had said to you, pretty much within 2 days, I was pretty much convinced to, choose Perfect Policy. One, because Daniela. Two, because the information she provided. The price was fantastic. And the coverage amounts were above what my current company was offering. So, it seems like a win. So decided to dive into it a little bit more. Okay. Now, I gave you a copy of, I guess this is the Real Deck page.
This is it.
This is the Real Deck page.
Yep.
And you don't really have, like I said, what you provided was not a deck page, but it might have the coverages. What are some of the differences you're seeing right now in terms of coverage amounts? I will tell you that the policy that I do have the deck page for is about $300 and some odd more than the Perfect Policy, But are the coverages more or less? I mean, in your opinion, when you look at those things,
I think the coverages really, honestly, are fairly equivalent. And this was the determining factor for you. We'll let the cat out of the bag.
Sure.
If that's okay for you.
Sure.
The only really significant difference, which is subjective, is the deductibles. We had the same deductible on all of the perils, the same deductible on named storm. Our windstorm deductible just was grouped in with the named storm. So it was a 2% deductible versus a flat $2,500 deductible for all of the perils and windstorm with the policy that you got. So that can make a difference. If you have a loss that's that's related to wind that's not related to a named storm, you'll have less of a deductible. So that's definitely a factor. Now I'm going to scare you a little bit, and then I'm going to make you feel better, and when it's all over with. So
I fully expect this.
This
Go
will
ahead.
be an entertaining little segment for you.
Great.
So the company that you did end up choosing is underwriters at Lloyd's, which is Lloyd's of London. Everybody's familiar with Lloyd's of London. You will have a notice on your policy that will specifically say this company is not licensed to do business in the state of Texas, which means they don't take part in the windstorm pool or any pool. So they don't have any rules that say they can't just say, see ya, we
Right.
don't have the money to pay you. If that were to happen with any standard admitted carrier, the Department of Insurance steps in and basically bills all the other insurance companies that are admitted in the state, and they all pitch in and pool the money to pay out the losses that occur.
Right.
So that sounds a little bit scary. Two, this policy is not flat cancelable. It doesn't get canceled pro rata. So if you decided that you didn't want this policy, 2 weeks from now, you're still committing to 3 months of this policy regardless. That's two. Three, this policy has taxes on it. So it's built into the price.
Right.
So it's not changing anything. But that's part of what's just built into it. Because they're not an admitted carrier, the carrier has to pay taxes to the state of Texas so that they, to
basically,
participate. It's basically a participation.
Yeah.
So we're not going to be licensed in the state of Texas, so we're going to pay taxes so we don't have to participate in that windstorm pool.
Right.
So those are a few things to be aware of. Now, all those things sound a little bit scary, and you might be thinking, well, I don't know that I particularly love this scenario. But Lloyd's of London is the oldest insurance syndicate. I mean, it's a market in the world. They invented insurance 500 years ago. So you're more than safe. I feel comfortable that you're going to, they're not going to just say,
right.
see you
Big
later.
storm comes and they're not going to fold.
They would not, because it would be a big black eye for them. So we sell Lloyd's policies, and in fact, we could have sold you this exact same policy. We just presented a little bit of a different angle on it. Legally, and this isn't really enforced, if you can get a insurance policy that's a standard market in Texas, you're supposed to take it over one that's a surplus lines carrier. So technically, we shouldn't sell you a Lloyd's policy if we can sell you a standard lines policy. That's the letter of the law.
Right. That's interesting.
We presented a standard lines policy to you. They're admitted in Texas. We wouldn't ever have to worry about that. It's probably the least enforced law that I've ever seen. Nobody ever.
Let me get this straight. Let me get this straight. So you're telling me it's law.
Technically, it's law that between these two policies, you should accept the one, or I shouldn't say you should accept if your insurance agent had a standard carrier that they could put you with, they should have offered you that first, because
Gotcha.
that company is.
Now that's the law. It's not law that I have to take.
Oh no! It's
Mr. Wilkinson, we're here for your arrest.
Exactly. Again, I told you it's going to scare you a little bit, but then make you feel a little bit
not
better.
Again.
Listen, we sell these policies too. Usually, and Lloyd's of London is something that people might be familiar with. They think of they insure Tina Turner's legs. Or Jimmy Durante's nose.
I didn't think about that.
Or
I didn't think about that.
They do, and it's what Lloyd's of London is it's kind of like a stock market in a way. It's not even a company. Lloyd's of London is a group of 99 different syndicates that are made up by members that just say, hey, I want to try to make money in the insurance world. I'm just going to throw money into these syndicates. And then when you need, generally it's for big, strange, hard to insure risks, like Tina Turner's legs. Or a big oil and gas company, or some strange new business that insurance companies just don't insure. One of these syndicates, you have a broker that you talk to, and that broker goes to this market in London, and they say, hey, here's what I got right now, and they sit down and they chat and they figure it out. It's like, all right, well, we're willing to do it for this amount of money per year and this much coverage and so forth, and they actually negotiate it every single time. Now, in these cases, this policy form has been negotiated, And I write probably 5 or 6 different underwriters at Lloyd's policies. We don't write this specific one, but all of them are all different because they've all been negotiated slightly differently.
Gotcha.
So it's a very unique situation. This particular one is through a MGA that we don't write through, but we write through a handful of MGAs that each have their own underwriters at Lloyd's contract that's negotiated, and they're all very, very similar. So it's just an interesting way of how insurance works that's different from, your State Farm, your Travelers, your Safeco, which are just a company that says, license me in the state of Texas. Here's our policy. This is what we're doing. This stuff is all negotiated in an open marketplace in London on Lime Street. It's a unique and interesting concept, and it's been there since the 1600s when insurance was invented. And insurance was invented initially to insure ships that were traveling around the world. If they're carrying gold, or they have a mission and they never come back because they sink, or something happens, that a lot of people put out a lot of money to invest in that scenario. Well, they came up with this concept of insurance. It's like, well, we'll insure that scenario, so if they don't come back, you can recoup some of your losses. So it's been around for like 500 years.
Yeah, I mean, it's when you think about insurance, and almost anything can be insured nowadays. I don't think there's very little that can't be, but when it comes to this type of policy, I think you have to be. I think you have to be a little bit aware of some of these things that you're bringing up to me now. And again, I'd have to think about it. Unfortunately, that's how I am, kind of an OCD thinker on these things. But I definitely think that information certainly would have been something that I would have been considering along with everything else, for sure. All right, folks, we are going into our next break here shortly, but I just want to throw out a couple things before we do. One, be sure to go to the Bringing It Home Radio Show Facebook page. Click like, love, any kind of emoji you want. We certainly would appreciate the acknowledgement. Stay up to date with what our experts are doing on a weekly basis. We won't overdo the post, trust me on this one. But I will tell you that all of these experts do share some information about their fields that are good to know at least once a week. And so we can share that with you if you just click us a little like. Also invite your friends to listen to the show or watch the show. Outside of myself, I think I do offer some eye candy for a few of you out there. Not from me, but just, look at this great looking gentleman right there, Jason Means. He's someone that you could probably keep your eyes on. And I'm sure, is your wife listening? Because she's probably like, what the heck's he doing? And then also, I want you to take a little bit of time to visit perfectpolicy.com. If you're, it is that time of year, maybe you are looking for insurance, or maybe you will be, but keep them in mind. But also go to their page on Facebook as well and give them a little like. Visit their website. Again, that's perfectpolicy.com. That's a fantastic name and URL. All right, folks, we'll be back shortly with Jason Means, owner of Perfect Policy Insurance.
Yeah, so I know Daniela didn't go over all of that stuff with you because it's, when we talk about, surplus lines versus standard lines and all those things. I know. And we could use that as a sales tactic. But the bottom line is, this is totally, Lloyd's of London's reputation is too important to them to bail on, and we have lots of people
right,
that
but so was all the big banks on one.
Yeah,
but it still was something. And again, I don't know if I wasn't. Maybe I should just say this for when we come back on, but because I think at this segment we're going to talk about how I came up with the decision and be more specific as to why from a layman's standpoint. From that, there was a lot of reasons from the beginning to the end to go with the policy you found me. In a lot of ways, it was perfect. So,
yeah, excellent. Well, no worries. No worries. Yeah, and I just thought that would make for an interesting segment to kind of scare you a little bit and then make you feel a little bit
Yeah,
better.
no, I appreciate it. I did not do my due diligence. I love being
well,
given that.
and that's one of those things that most agents don't talk about. But in some cases, when you do a Lloyd's of London policy, and by the way, there's lots of different names. There's ACE, QBE, Hiscox. There's 99 different syndicates that are all the same, that come from the same place. This one.
When you say syndicates, are you saying this one is a syndicate? Or
No, this is
this
is an MGA.
All right.
What they represent. Your agent McCorkle is appointed with Appalachian Underwriters. Appalachian Underwriters writes through, I don't know, like 20 or 30 different companies that they offer. It's a way for McCorkle to get access to insurance companies that they can't get through directly. So this is just a wholesaler, basically. So you're the end customer, the retail customer. McCorkle is the retail agent. Appalachian is the wholesale agent. Underwriters at Lloyd's is the actual carrier. And so when you call to make a claim, you will actually call your agent, but it'll go up the line, and the company that actually pays out is the Lloyd's policy. So there's a lot of layers.
I was going to say there is a how come.
Now we in this scenario, Swift underwrites for Clear Blue. This is a Clear Blue policy. So it's a very similar scenario. This is just a U.S. company.
And how come you just couldn't go straight to Clear Blue?
They don't appoint anybody directly, and neither does Lloyd's.
Right.
So
Okay.
Now there are some MGAs that do offer companies that we do write direct.
Okay. I was just wondering if that's
It doesn't really affect the end insured, because basically where the wholesaler makes a profit. Of course, they have to make some money. That usually comes in the form of a cut in the commission that the retail agent gets. It's usually a point or two. So times hundreds of agents, then they put that together and they make a little bit of money. So, but that, like Lloyd's, instead of dealing with 200 different agents, they deal with one company.
Gotcha.
And it makes it a lot easier for them to do business. So it's their choice.
Wow. Okay. Hi.
It's cold in here.
Welcome back. We are into our final segment of the bringing it. It does go quick, and there's. I'm sitting here just thinking. I'm learning more and more about insurance as we go on. And in case you haven't guessed, I'm going to reiterate. I am talking today with Mr. Jason Means, owner of Perfect Policy Insurance. And during the break, we kind of were talking, and if you were on Facebook Live, you heard us, so it's not really a break at that point. But we were talking about some other things to kind of look at and understand about, the way the insurance industry works. And it does make a difference, in a lot of ways when you're shopping insurance. But again, there's going to be a lot of risks that could be out there, and it's what value you put on those risks as the consumer. So before I kind of just go all out there and give you my reasoning and thought and my selection as to why I selected, I wanted to just cover some things that we had already talked about. So yes, price is important, right? I mean, we all want to save some money if we can. And that's why I entrusted my current insurance company and the people at Perfect Policy to help me with that. But it wasn't just about price. It was also about the coverage. And the one thing I can say about the Perfect Policy people was that it did feel to me that your team truly was looking for the perfect policy you could find for me. Now, there may have been some goal sets on here, and you had mentioned it. That price was important. Maybe you could have matched the other policy exactly. But for Daniela, that was not her goal. Her goal was to get me
the best price.
The best price on that.
As long as we're within reasonable coverages.
Exactly. I mean, you wouldn't want less coverage, less deductible, and more deductibles to get less money. And so she did a wonderful job of balancing that. And really, at the end of the day, the price and some of the coverages were just better, and coverage amounts were simply just better than my current insurance company and the policy that they found. Now, I will tell you that my current, I didn't ask, but probably because they were used to me always shopping every year, they had done that. They had gone out, and when they introduced this to me, it was before I even asked. And they, not this one in particular, but it was another one, because they then informed me that my current insurance policy was going up and the coverages weren't changing or anything. So they were just like, let's see if we can find them with the same coverages and better price. So they went ahead and did that.
Sure.
Before I even asked. So that's one of the things. So I like the idea. Now, that being said, they found a better one when I showed them yours. I said, look, I'm shopping and this is what I do. And I'm not trying to beat price, and they know that. And yours was simply better in a lot of ways, the policy that you found me, like I said. But the one difference that you had brought up that made a big difference for me was that wind hail deductible versus the windstorm deductible. Windstorm is 2%. It's 2% no matter what policy you get.
Right. Name storm.
Yeah, name storm. And so that's your, Harvey, that's your, and again, that's wind related, not the flood portion of that.
Right, exactly.
It's your Ike, it's all those. We may get those every few years, so it's possible, and that's why, we always kind of have to carry it down here. It's always in a policy. But the terminology used kind of threw me off, and it didn't catch my eye. My assumption when I got your policy, and again, it was, 2% wind, hail. Didn't even think about it. Wind, hail. Did not. I was like, 2%, that's normal. Wind, hail. That's all that's in my head. Well, I had told Danielle, I said, look, I love your policy. I think this is, I'm 99% there, but I just want to give my provider the chance to see if they can, be somewhere on the same lines. Don't think they can,
Right, sure.
And it ends up they couldn't.
Right.
So we were right on that count. But they brought up the fact, the only things that we see different is that for unnamed storms, or unnamed, wind, whatever you want to call it, you're going to have to pay still the 2% with this other policy. And that's a $5,000 difference.
Sure.
With our policy, meaning, the current one that they were providing, you will, you only have to pay the $2,500 deductible for the unnamed stuff, the wind and perils. And I was like, wow, I didn't even think about that. So I did go back to Danielle and I was like, can you clarify this for me? Because I was hoping,
Right.
she was the other agent was kind of
sure.
misreading things. And, Danielle confirmed, no, it's, this particular company at this particular price, this is how they do it.
Right.
And it has to be. So we understood. And that was one of my biggest considerations. That was the only thing at that point.
Sure. And that was something that's important for you, and some
Exactly.
other people would view it differently. A lot of people, and I don't subscribe to this, obviously, because I've used my insurance, especially the flood. I really don't think they're ever going to use their insurance.
Exactly.
So to them, if they can save $400, then they're going to save $400, and that's something else they can do with that money. But come claim time, if a claim occurs, then those things you have to be aware of for sure.
And I can only stress this enough. It did come down to a personal preference. Every indication outside of that, letter to letter, was all about perfect policy. And it just was, and how, much I wanted to go with that policy. Again, it was $300 less than the policy that was being offered by my current thing. But at the end of the day, when I risked that difference, I would probably go with the perfect policy, and then all of a sudden we would have some unnamed
Sure.
damage.
Murphy's Law.
And instead of the 2%, which was $7,400, it would have cost me $6,000 to fix. And
Right, sure.
So we ended up going with that. But I just wanted to end today's show by saying that although I ended up going with a policy that was not the perfect policy, and it cost more, I can't tell you how much I appreciated the straightforwardness and diligence of Daniela and the team at Perfect Policy. So, and again, that's why you'll continue to be on our reference.
Sure.
And then again next year.
Yeah, you never know.
So
Absolutely.
it won't be in the next 3 months, apparently, like
no,
you told me.
for sure.
All right, folks. Well, I want to be sure I say thanks to Mr. Jason Means for joining us once again. And remember, go to www.perfectpolicy.com BIHPerfectPolicy.com. It's time to shop for insurance, and that's the best way to reach a great agent that's going to give you a perfect policy.
I like it.
All right, folks, next week.